Hey Laura, this is Ryan with TrendLizard.com. Welcome to TrendLizard. Thanks for signing up on our website. I think you're going to like what you find. We're here to teach you about Elliott Wave and how to apply it to stocks. And we're going to start right now by taking a look at Google. Thanks for the email. We've taken a look at this guy before. We're going to do it again from the beginning just to make sure we cover all our bases. And it's a pretty intense analysis just because Google has obviously been in such a massive uptrend for so long. So we got to take a look at it on every time frame and show you exactly where we have us in the progression of its Elliott Wave advance. So Google Alphabet was incepted back in 2004, had a nice run basically from the start when it was back I think around 50 or wherever it was. Had an ABC pullback, and this is where it really got started off that 2008 low. So we are in a large, trendy 5-wave advance off this 2008 low. Here's the first wave. Here's the second wave. Since then, we have been in this massive, extended third wave advance to the upside. Nothing has occurred to offset this second wave pullback here, so we believe we are in the third wave advance still off that 2011 low. So the key here is finding the completion of this third wave advance. First, second, third, and fourth wave. We're in the fifth wave of that third wave advance. When this third wave completes, we're going to get a much larger pullback, something on a similar scale to what we saw here for the second wave pullback as a fourth wave, and then we'll get that fifth wave to the upside. But I think the current priority is determining when this third wave advance is going to be, end, because it will usher in the largest pullback we've seen in quite some time. So really the key lies in what's happened off the 2020 low. As you can see, that looks like it's the fifth wave of this third wave advance. So when this completes, that's when we get that larger pullback, a large fourth wave correction. So let's go ahead and zoom in just a little bit more on this 5-wave advance. This breaks it down into more detail. You can pause the video if you like, just get a closer look at it. It just shows in more detail how everything subdivides so nicely. Every single up leg takes on a 5-wave form as it should to the upside. So again, we're looking for the completion of this up leg off the 2011 low. Once it becomes a completed 5-wave move, then we know that larger pullback's coming. So we had a first wave, a second wave, a third, a fourth. That was the 2020 drop. And now again, we're in the fifth wave of that third wave advance. So really the only thing that we care about, again, is what's happened off the 2020 low. Once this takes on a 5-wave form, that's when we have to become more cognizant of the possibility of a much larger pullback, again, something to the scale of that 2010, 2011 pullback. So let's go ahead and zoom in and see what's happening off the 2020 low. Here is that advance. It is currently in the third wave of that advance. Again, it should take a 5-wave move before it's complete, but you have a first wave up, a second wave pullback, tested the Fibonacci support area that we like to put on our charts. It's the yellow areas. Basically represents a 38.2 to a 61.8% retracement. This yellow area does, and it tested it and turned higher. That's what we expect to happen. So we, again, appear to be in the third wave of that advance. Once this third wave completes the move off of September's low, we'll get a fourth and a fifth wave up to complete the move. So on this time frame, the advance off of March's low is not yet complete. Higher prices are expected. However, it does look like we could be getting closer to a high to the third wave advance that began in September. As you can see, that third wave advance has taken a 1, 2, 3, 4, and appears to be in the fifth wave of this advance here. So once this up leg completes here, again, we'll get a fourth wave pullback and then a fifth wave advance. So things are pointing higher. We just need to be aware that it seems to be getting closer and closer to some type of larger correction to the downside. So here's the key. I own Google. I like Google. I'm bullish on Google. I think it's going to head higher. I always think it's going to head higher until something happens to indicate otherwise. It would take a move below 2100 at this point to indicate that the fourth wave pullback has begun on this time frame. So it would be the move that offsets this second wave here, first, second, third, and then we would be getting that fourth wave pullback, which again would be confirmed with a move below 2100. So as long as it's trading above 2100, I'm owning Google. That's my personal stop level that I have for my position on Google, and higher prices will be expected. But if at any point it turns down and moves below 2100, it opens the door to a larger fourth wave pullback. That would be enough for me to step aside. But again, it would just be a fourth wave pullback before we get that fifth wave advance. Let's zoom in on one more bit here. We're just going to look at the advance off of March's low to the upside here. This is that advance Trendy action to the upside off of March's low, and then this choppy action that happened this week looks like counter trend movement. So as of the close of this week, there's nothing that suggests Google is at a high, and that's the other reason that I'm just bullish on this guy until it does something wrong. And again, that would take a reversal, a move below 2100. Before then, you might get an extra clue. You could see some trendy action to the downside. That would be a warning that maybe a high is already in. But as long as we're getting trendy up legs and counter trend pullbacks, it would be really hard for me to exit Google because it's been such a stud. So just a quick review. We're still in that massive advance off the 2008 low, in the third wave of that. At some point in the not too distant future, we will enter a larger fourth wave pullback, but we're not there yet. It would take the completion of this this advance off of the 2020 low, and that move is not yet complete. Until it's a 5-wave advance, higher prices have to be expected. And then on the very short-term time frame, a move below 2100 at any point tells you a larger fourth wave correction has begun, would point down to this yellow area here before the correction completes and price turns higher again in a fifth wave advance from there. So a lot to digest. Sorry about that. That's just kind of how it is in such a strong move that has so many different time frames at play right here. So, but I hope that's helpful, Laura. I'm here to answer any questions you have in your journey of learning Elliott Wave. So again, welcome to the team. Have a wonderful weekend, and we will talk to you again very soon. Take care.